Welcome back to the channel, everyone. Today we're going in depth on one of the most exciting and yes, controversial stocks in the entire market, Palantir Technologies, ticker symbol PLTR. Just a few months ago in early May, Palantir dropped their Q1 2026 earnings, and the numbers were nothing short of impressive. Revenue jumped 85% year over year to $1.633 billion, marking their fastest growth rate since going public. U.S. revenue more than doubled with 104% growth. U.S. commercial revenue exploded 133%. And they didn't just meet expectations, they crushed them and raised full-year guidance. Adjusted operating margins reached a stellar 60%. The stock itself has had quite the journey. It climbed dramatically to over $200 late last year before experiencing a sharp pullback. As we sit here in early July 2026, shares are trading around the $130 range, giving the company a market capitalization north of $300 billion. That's a massive valuation, but one that reflects huge expectations around AI. Now, full transparency, as someone who has built a concentrated portfolio with roughly 55% allocated to PLTR across my various accounts, making it my largest single holding, this company isn't just an investment for me, it's one I've studied intensely. In this deep dive, we're going to unpack the full story, what Palantir actually does, their platform evolution, the latest financials, big catalysts like the NVIDIA partnership, valuation realities, the risks that keep me up at night, and my current personal thesis. Before we jump in, a quick but important disclaimer. Nothing in this video is financial advice. I'm not a licensed advisor. Investing, especially with heavy concentration like my 55% overall position, carries substantial risk of loss. Always do your own thorough research and consider speaking with a professional. Markets can change quickly. All right, let's dive deep. Before we go any further, let's make sure we're all on the same page about what Palantir actually does in 2026. At its core, Palantir builds powerful software platforms that help large organizations integrate massive amounts of complex, often messy data and turn it into real-time, actionable intelligence for high-stakes decisions. They operate three main platforms. Gotham has long been the go-to for government and defense customers. Think intelligence agencies, military operations, and counterterrorism work where speed and security are non-negotiable. Foundry does something similar, but for commercial enterprises, helping companies in manufacturing, supply chain, energy, and finance optimize operations through sophisticated data modeling. Then there's the star of the show right now, the Artificial Intelligence Platform, or AIP. Launched a few years back, AIP takes everything to the next level by safely embedding large language models and autonomous AI agents directly into a customer's own data environment. Thanks to Palantir's ontology, essentially a highly structured way of defining and connecting all their data assets, these AI tools can reason over proprietary information without ever sending it to external clouds like those from OpenAI or others. What really differentiates them is the forward-deployed engineer approach. Instead of just selling software and walking away, Palantir embeds their own experts with the customer to customize, troubleshoot, and scale the deployment. This creates incredibly deep, sticky relationships that are tough for competitors to displace. It's not cheap or quick, but the results speak for themselves in retention and expansion. Palantir's story starts back in 2003, founded by Peter Thiel and a talented group with roots in the PayPal mafia. Early on, the company focused on helping governments tackle incredibly difficult data problems, particularly in counterterrorism and national security after 9/11. They built a reputation for delivering results in environments where traditional software failed. The journey to public markets was a big milestone with their 2020 direct listing. Like many tech companies at the time, the early public years involved proving they could scale commercially while managing high growth costs. There were plenty of skeptics who viewed them primarily as a secretive government contractor with questionable optics. The pivotal shift came around 2023 with the launch and maturation of AIP. This wasn't just another feature, it reframed the entire company as an enterprise AI operating system. Commercial growth started accelerating, profitability improved dramatically, and the narrative moved from spy tech concerns to AI infrastructure leader. By 2026, U.S. commercial revenue is the standout performer, while government work remains a stable, high-margin foundation. It's been an incredible evolution from niche player to one of the most watched AI stocks. Let's spend some quality time on the technology itself, because this is where Palantir's competitive edge lives. Gotham remains critical for defense and intelligence, powering things like mission planning, threat detection, and logistics in complex operational theaters. Foundry brings that same power to the private sector. Imagine a global manufacturer being able to connect factory floor sensors, supply chain databases, ERP systems, and external market data into one unified ontology. Decision makers can then query this in plain language and get trustworthy answers. AIP supercharges both. It integrates generative AI models while keeping everything under the customer's control. You can deploy AI agents that orchestrate complex workflows, for example, automatically rerouting supply chains based on real-time disruptions while maintaining full audit trails for compliance. Recent advancements include running the ontology at the edge on devices, the AI hive mind for collaborative agent intelligence, and specialized forward-deployed AI engineers who accelerate adoption. The ontology is the secret sauce. It's not just a database, it's a living model of how all entities in a business relate to each other. This is extremely hard for generic AI tools to replicate, giving Palantir a durable moat in secure, operational AI. Understanding the business model helps explain why the financials are so impressive. Palantir typically wins with multi-year contracts that involve significant upfront implementation work. Their forward-deployed teams work side by side with customers to build custom solutions, which leads to natural expansion as more use cases are discovered. Q1 2026 highlights this beautifully. 206 deals of $1 million or more, 72 over $5 million, and 47 over $10 million. Total contract value closed reached $2.41 billion, up 61% year over year. U.S. commercial remaining deal value, the backlog of committed future revenue, grew 112% to $4.92 billion. This isn't transactional selling, it's strategic partnerships that compound over time, driving high retention, predictable revenue, and improving margins as deployments mature. Let's get into the numbers that really matter. In Q1 2026, Palantir reported total revenue of $1.633 billion. That's an 85% increase from the same quarter last year and 16% growth sequentially. Breaking it down geographically and by segment paints an even stronger picture. U.S. revenue alone came in at $1.282 billion, more than doubling, up 104% year over year, and now making up the vast majority of the business. Within the U.S., commercial revenue reached $595 million, with 133% growth, while government revenue was $687 million, up 84%. This shift toward commercial is exactly what bulls have been waiting for. They also closed a ton of meaningful deals, 206 deals worth at least $1 million, 72 over $5 million, and 47 over $10 million. Total contract value closed was $2.41 billion, up 61%. U.S. commercial remaining deal value, basically future revenue already contracted, surged 112% to $4.9 $3.92 billion. On profitability, it's even better. GAAP operating margin hit 46%, adjusted operating margin 60%, and adjusted free cash flow margin 57%. GAAP net income was around $871 million. Cash and equivalents sit at about $8 billion, mostly in safe U.S. treasuries. Perhaps most importantly, management raised full-year 2026 revenue guidance to between $7.65 and $7.662 billion, implying roughly 71% growth. They also boosted U.S. commercial guidance to over $3.224 billion, at least 120% growth. Alex Karp highlighted that their Rule of 40 score, growth rate plus operating margin, reached 145%, putting them in rare company with names like NVIDIA. This isn't just growth. It's profitable, high-quality growth with expanding margins. For a company that spent years in the show-me phase, this feels like validation. Beyond the quarterly numbers, several catalysts are adding fuel. The partnership with NVIDIA stands out. Recent developments focus on sovereign AI architectures where Palantir's platform combines with NVIDIA's Nematron open models. This allows U.S. government agencies and critical infrastructure operators to run powerful AI entirely within secure, controlled environments. No data leaves the building, and customers maintain full control over model weights and training. This is huge for both defense and regulated commercial sectors. It builds on earlier reference architectures and positions Palantir as a key enabler of trusted on-prem AI at scale. Other wins in government programs continue to reinforce their position. With shares around $130 and a market cap exceeding $300 billion, valuation is front and center in any PLTR discussion. On a forward sales basis, it's premium territory, roughly 40 times 2026 guidance. Traditional PE ratios look extremely high, but that's typical for hypergrowth AI leaders. The stock has rewarded believers with massive gains over the years, but experienced sharp drawdowns along the way. Analyst targets tend to cluster higher, reflecting optimism around continued execution. The market is clearly pricing in Palantir becoming a foundational AI infrastructure company. Let's be real about the risks, because no deep dive is complete without them. The high valuation means any slowdown in growth or margin pressure could lead to significant downside. Competition in the broader AI space is intensifying. Government contracts, while sticky, can face political and budgetary hurdles. Scaling the commercial business globally while maintaining quality isn't guaranteed. Macroeconomic shifts or interest rate changes could also weigh on sentiment. On the personal side, with approximately 55% of my holdings concentrated in PLTR, this is without question an aggressive stance. I accept the volatility and concentration risk because I believe Palantir's combination of ontology, AIP, and forward-deployed expertise creates one of the strongest moats in operational AI. The accelerating U.S. commercial growth, sovereign AI tailwinds with partners like NVIDIA, consistent margin expansion, and proven ability to deliver in the toughest environments give me high long-term conviction. That said, I review this position regularly and strongly recommend that most investors avoid this level of concentration. Position sizing should always match your personal risk tolerance and time horizon. And I want to add that I got in early a few years before the massive run-up. To wrap this up, Palantir has successfully evolved into a profitable, high-growth AI leader with real technological differentiation. The Q1 results and raised guidance show the momentum is real. Key things to watch going forward include commercial deal velocity, AIP adoption metrics, major contract executions, and how the NVIDIA collaboration scales. My overall thesis remains constructive for the long term, but always verify the latest data yourself. What are your thoughts on PLTR at these levels? Bullish on the AI operating system story or waiting for a better entry? Drop your takes in the comments. I read them all. If you found this deep dive valuable, please like, subscribe, and turn on notifications for more stock analyses. Thanks for spending your time with me today. Trade and invest responsibly, and I'll see you in the next one. Disclaimer once more, this was for educational purposes only and is not financial advice.